Hey, welcome back. I'm Joshua Bellinger, and today we're going to follow the money. I'm going to show you a $4 million trade in the options market, betting that shares of this company are going to go higher in the next several weeks. Now, if it doesn't go higher, they lose it all. If they bought, and we're going to talk about why they bought, why it's meaningful, and how to trade it. So we're going to take a look here at Activision. We're taking a look here at a weekly time frame. Now, why the weekly? Just because I like to change it up on you, and I wanted to look back at a little bit of the historical price action coming into this. So right now we're just off highs and it's just trading around 90 to 104. A little bit of a range here, but the interesting thing is right now we are in earnings season and earnings are coming up. This is important if you are trading because there is no edge in trading earning releases. Now you might have a system of trades that happen before earnings or going into earnings, which is fine, and then you have trades after. But there's no edge trading earnings. There's no edge of selling options. There's no edge of buying options. There's just no edge. There's no edge of following unusual option activity. There's no edge, zero. So with that in mind, this is why it's an interesting trade of what came across the tape today, why it's meaningful. So coming out of here, this is important because we are looking for positioning in the options market oftentimes, and just because we see some unusual, what people refer to as unusual call activity. It's very broad, but just because it's unusual doesn't mean it's meaningful. And what we have to try to do is find out why, if this is meaningful, what kind of impact does it have and why could it be meaningful? So let's take a look here at the meaningful activity that I followed today. The September contract that has the 92 and a half strike price on the call here traded 10,000 times. Now, I have a separate system. This is just a brokerage system. You're not going to get the best if you're trying to find unusual option activity. There's no brokerage platform that's going to offer that to you. I'm just looking here at the time and sales because I don't want to flip through windows, and here I just have it isolated to that September contract. Now, the first bigger contracts show at 385. It looks like traded on the when the market was 385 by 390 at the time, but overall, the volume on this, those 10,000 contracts, I can tell you from the data from the exchange and from the confirmation on this one, it was about 70% of them traded on the offer. Now, the bigger contracts did trade on the bid side of the marketplace, but if you look at previously, because this is by quantity, previously you could see where they had their market at in the market. They moved the market to them. So 375 by 380 at the time, they had moved the market. The market moved higher for where they were on the amount of quantity that they're trying to get filled for. So they moved the market, and they eventually got filled there. So these are interesting because they're buying the 92 and a half. Prices are at 91 and a half, and they're paying about $3 and I'm going to say about 385 mostly to be where most of them got filled, 385, 390. So overall, that's about just about $4 million in premium purchase. That's pretty meaningful. Now, it doesn't always mean that someone knows something, some kind of insider information. Oftentimes, it's just positioning, and that's why it's important to understand and following just unusual option activity in general. Because oh my God, this is unusual. It doesn't pan out to be something that's very useful. You have to overlay it with a couple things. This kind of trade, $4 million. This is deep pockets, and they're putting on a position. It's interesting why before earnings, when they could wait till the earnings release here. Why are they playing it before earnings? They're making a very bullish bet. Why? I have no idea. But it's interesting, and it's very noteworthy because it has 59 days to expiration. So it's timed where they're going to try to capture the earnings here. And when you buy a call, you look for it to go higher. Now, there's other reasons why they could be active, what they're doing in here. But typically, you're going to see volatility increase in these contracts. Not so much in this. You're going to see it in September, but more in the front month contracts where volatility gets pumped up and then it comes down. You have an IV crush. But overall, this is interesting. This is something I would keep an eye out for. I'm not going to be interested in trying to play beforehand, but this would be one I would keep on the radar. Say, hey, look, maybe if there's a reaction off this, to get into those calls at a little bit of a better price if it has a crush here, or if you're looking to trade a wild card. I mean, you play something where you spread it off, buy one, sell the other. So, that's interesting. $4 million. Why are they doing it? That's the interesting part, right? So let's see how this pans out. It has 59 days to expire. And again, this is not a trade that they're going to stop out of. This is an institution putting money down, and this is their position. So the reason why it would be for instead of using the options market versus stock, because the amount of stock that they would have to tie up capital for, this is a bit of a bet, a directional bet, where they can capture a good move if they're right without having to have that outlay. So it's not necessarily because somebody knows some inside information. It's just because people have research, people have to outlay money, they have to make directional bets, and they go into the options market, they use the options market, the leverage that is provided to them, and liquidity, and they make their bets that way. So we'll see what this one has. Make sure you like the video below and hit the button. Hit the button with the bell, boom, because you want to know when these come out every time I release them. So we'll see you in the next one, and I'll talk to you then.